Hello everyone, welcome back to another FinMeUp weekly wrap where we cover the most important stock market highlights that happen in the week with its directors' dealings or results or announcements, all summarized with additional insights. This week we interviewed Keith McLaughlin where he shared some of his his top five JSE stock picks. The link is in the description for that video if you want to go check that out. Two of those companies I personally own, which is Santova and Master Drilling. For more insights on that, you can check that video. So let's get into it. First one, MTN Group. I'm an MTN user. Their group service revenue increased by 14.4%, and that is driven by a 30.4% increase in the group's data revenue and an 8.6% increase in fintech revenue. So, data is still the currency. It's we needed to do these conversations, to do anything on Instagram, to chat with our friends or WhatsApp. We need data, and that's where MTN is, and we've seen some great growth there. The EBITDA increased 12.4%, and the earnings per share increased by 40.4%. So, great results from the look of it. I didn't cover MTN too closely. I know, Paul, you can add more comments on MTN. And the last comment on MTN, the company's subscriber base grew by 6.1%, and a final dividend of R3.30 was declared. So, what do you think of these results, Paul?
Yeah, thank you, Hugo. I think it's great results. So well done to MTN. The problem I have with MTN is twofold. Firstly, they will always have the Nigeria hangover because most of the operations is in Nigeria, and Nigeria is a little bit politically unstable, even though it's one of the biggest economies, if not the biggest economy in Africa. There's been quite a few military coups. They had the election where very few people actually voted, and there's a lot of conflict. So that's my one concern. The other concern is that Nigeria's success is heavily dependent on oil. They're massive dependent on oil. So if the oil price is doing good, of course everyone is happy. If it's not doing that great, they've got problems. And the government can step in at any time and say, MTN, you broke a SIM card rule, please pay 300 billion in fine or whatever, something like that. So there's my reservations. But on the flip side of the coins, MTN is so well positioned to take advantage of this fintech revolution that we're seeing at the moment. Basically, them or the data companies, the salary companies, and the banks, because data and money is probably the two most important commodities in the world at the moment. And if you can win that race via your super app, then you are going to dominate in the next 10 or 20 years. So there I see great things to come for MTN if they can pull it off, of course. So let's see what happens, but I am cautiously optimistic.
Cool. Yeah, the other thing that's, I think, underrated with MTN's case, for example, even Vodacom, is when you take out a contract with them, whatever you do with them, you need to be FICAD and, the KYC and all of that. So other fintechs have to first do that in order to provide you with products, etc. Where MTN already has that. So, it's for them so easy to start cross-selling via their super apps. So it's definitely interesting to watch. As it stands, I don't own any MTN shares, but definitely a company worth tracking. The next company created chaos on the markets this week. It's down 82% from the highs this week alone. I'm not exact sure, but it's around like 50% down, if not more. It's a company that Twitter is talking about continuously, and that is Transaction Capital. I was a fan I was a fan of Transaction Capital for quite a few years. Remember it, when it was R8 a share. The first time I looked at it, and it just gradually increased, and then they bought WeBuyCars, and ADvTECH was operating well. Their other services was doing well. The market got excited. WeBuyCars, growth company. SA taxi. There's always going to be a taxi industry, and the share price was quite highly valued when it was around 50 rands a share. PE was very high, and a lot of expectations. Then in December, the CEO, which is obviously the kingpin of a business, sold. What was it? 40% of his stake in the company. It was around 40 to 50 million rands worth of shares. When I own a company, it's always positive to see when directors are buying shares, because directors buy shares for one reason. They've got the best insights of what's going on in a company. And when they buy, it usually means that they think, the share price is undervalued, so they're buying. But when they sell, there could be many reasons. It could be to settle tax obligations. It can be to buy a new beach house. It can be for some cash flow. Um, or it can be that they think the share price is going to fall. And that could have been the case. I don't understand exactly what's going on with Transaction Capital. There will probably be quite a few announcements over the next coming weeks to clarify everything that's been going on, because there's been a lot of directors selling. All the previous directors' dealings were sells. That tells you something. And then yesterday, or 2 days ago, one of the directors bought shares again at 15 Rand a share, but now the share is below 9 Rand a share. So just in short, why it fell is because the business is struggling. The earnings per share fell quite a lot. It's going to be between 20 and 50% decrease, which is not great. Then there's the lack of confidence in the management because they're selling shares. Then there is ADvTECH that has structural damage. And then it's We Buy Cars with some margin pressure. Then it's, rebranding. So, for example, they are busy with ADvTECH, and Gomo will be restructuring to a new mobility platform branded as Mobilis. And, there's just so many things going on. It just feels a bit sketchy. But, there is a point we should ask ourselves, when is it, really undervalued? And when is it, this is a falling knife, there's red flags, just don't touch it. It's going to be quite interesting to watch. So, in the comments, we'd love to experiment with this. In the comments, let us know. Next week, Friday, when we record the weekly wrap next week, Friday, do you think Transaction Capital will be higher than it is today or lower? We'd love to see what the majority says, and, let's see where the market is at, and let's see who's right and who's wrong. I'll go, personally, for it's going to be higher. I think it fell really hard. But let's see. Paul, any thoughts?
Yeah, I think you hit the nail on the head. Everything you said is right, and I'm also waiting for clarification because I don't think anyone really knows exactly what happened. But the two main events, like you said, the one was the trading statement saying that ADvTECH is in big trouble. Now, ADvTECH is a big part of the business. It's not as big as We Buy Cars, but it is a big part of the business. And then secondly, the selling, the continuous selling from directors. I mean, that was very sketch. And I know you actually sold your shares. I didn't sell my shares. I thought something is weird, but okay, it's a very small part of my portfolio. But now I'm not a very happy shareholder. Let me tell you that. It's one of those things. You win some, you lose some. But let's wait and see. And then next week, Friday, we'll discuss the updates.
Yeah, let's see. It's going to be very interesting. I don't think anybody has the answer. The next one is a company I also own. Started buying around 3.35 Rand. And I'm actually looking to add more if I feel that the time is right. I don't know if the time will ever be right, but it's a company that I like. I see a lot of growth potential, and that is Stadio. So they came out with their results for the year ended 31 December. So this is before the January and February adoption of new students. So the revenue increased from around 1.1 billion Rand to 1.2 billion Rand. So that's the revenue increase. But majority, people are looking at their earnings growth, the profit growth, and then the student growth, because essentially the students is the factor that leads to the profit growth. So semester 1 students increased by 11%. So that was, from January to end of June. And then semester 2 students increased by 8%. So lower growth in the second semester. And I listened to the investor presentation or the webinar, and there's a few reasons for that. So a large number of their students are actually coming from corporates. So corporates and employees doing postgraduates and extra diplomas and extra degrees, and that's where they go to Stadio, to their online offering. Remember, more than 80% of Stadio's students are online. So that's what I love about Stadio. It's very scalable. They've got very low debt. The earnings per share grew by 31%. They declared a final dividend per share of 8.9 cents, which is an increase of 89%. And also in the presentation, management highlighted that they want 85% of their free cash flow to be returned to shareholders. That will probably be mostly through dividends, but also probably, maybe through stock buybacks or who knows what. And even after that, they are confident that there's enough capital for growth. They are busy with a Durbanville campus that's still in preparation. They are wary of the economic conditions. They have to invest into load shedding proof equipment and generators, and then there's obviously the consumer that is struggling. Their bad debt is only around 4.7%. Their target a few years ago was to keep it below 5%. Bad debts, people not being able to pay what they owe. And they said they'll be happy if they can keep it below 8%. And the other thing is, with new students are likely to remain for 3 years. So the student growth that you see now, it's almost like a recurring revenue for 3 years, if you look at the average. And another interesting fact, which is the last point I'll mention, which really excites me, it's not a direct correlation or direct meaning to what's going to happen. But if you look on Google Trends, so Google Trends tracks the activity on Google. What people search, what people talk about, everything that happens on the internet. And if you go to Google Trends South Africa, and you look at the period, you can go 12 months, or you can go 5 years, or you can go 3 months, whatever. If you look at 12 months ago, or even a 5-year view, the Google Trends is spiking, like a lot. The growth from last year wasn't too big, 11% semester 1, 8% semester 2. But if the Google Trends is an actual representation of what the student enrollments will be, I am very bullish. But the thing is, people searching for something, people interacting with something does not necessarily mean that they are enrolling and paying. So that's something we're going to have to track in the next set of results. Management also highlighted in the investor presentation that they've seen a lot of interest, but they still don't know yet how much of those will be enrollment. So, they've got a clear plan to generate returns for shareholders through the form of dividends, and the management is really experienced in this field of what they do. It's a capital light business. 80% is their target to be online, which is very scalable. I like this company. It's not something that's going to shoot the lights out. This is something that I'm with a 5 to 10 year view. It's got a massive total addressable market, and it's going to be interesting to watch. Paul, any thoughts?
Yeah, I think everything, once again, you hit the nail on the head. Just maybe something interesting to mention on top of that is for the viewers, as you can see, the revenue increased by about 10%, but the profit and the earnings per share increased by more than 30%. So the big question is now why? How does this actually happen? It's all about expenses. Remember, this is a scalable online business. So most of the infrastructure is now already built. So the operational expenses is a lot less than it used to be. So that's what makes me super bullish. It's an online company. It's almost like Tesla. It started out as a electric vehicle company. This company started out as an online tertiary education company. So they got everything from the start. That was the blueprint. And I'm excited about this company. I'm not going to lie to you, but the market is also a little bit excited. Just be cautious as a shareholder. The multiples are not super high, but it's not low either. So it's not like no one knows about this. It's not like an undiscovered gem. I do think it can become a gem. Long-term investment for me, 5 to 10 years, like you said.
Yeah, it's a high growth company on the JSE. You don't get a lot of those, and it's basically venture capitalism on the JSE. The next company, not venture capitalist, but an investment house that's received a lot of heat over the past few years. They're sitting on a few quite interesting investments. The management is experienced, no doubt about that, but they've also received their piece of the pie. That is African Rainbow Capital Investments. So they posted their interim results. So it's for the 6 months that ended 31 December. So just a few comments. Several of the large early stage portfolio companies have shown significant growth, and that includes Rain. So in the telecommunications space, if you need Wi-Fi, that's one of them. Time Bank, which is seeing a lot of growth, even on the Google Trends. Once again, it's a metric I love to watch with B2C products, business to consumer. Time Bank is seeing a constant growth in users, in new clients. They launched in the Philippines, so it's quite interesting to watch. It's an interesting company. They've got Time Global and Crops PLC. The intrinsic net asset value, so the value that the assets are combined per share, was stable at the share was R9.88, so the net asset value, and that was a decrease by 1.7% from the previous year. So there's actually a decrease in the asset value of the company. How these assets are valued is a mystery. I don't really understand it. That's the thing with holding companies, especially with unlisted companies. You don't know exactly how it's valued. Then also their cash increased by 57% to just over 1 billion rand, while debt in the fund also increased by 43% to 1.3 billion. The major disposals were finalized, so they sold their shares in AfriMat, PayProp, and Human States. I spoke to someone yesterday who said, they loved PayProp as a business, but, they disposed that. The IRR, so the internal rate of return on AfriMat, if I remember correctly, was around 17% annually. So, that's good. AfriMat performed well. Great management team there as well, but something for a different day. And then also they made major additional investments, including a 490 million investment in Time Bank and Time Global. And then ARC Investments has a diverse portfolio of listed and unlisted assets that have shown resilience against the challenging macroeconomic environment. So it's a complex business. The management fees was a hot topic over the past few years. That has changed recently, which is a positive sign, a sign into the right direction. But these holding companies, there's usually always a discount to net asset value, so that doesn't excite me too much. I really like their asset in Time as well as Rain. But for me, I'll just rather invest either in ETFs if I want major diversification, or I'll just invest in specific companies that I really follow closely. That's just my personal preference. Any thoughts on that, Paul?
So I don't know much about African Rainbow. I know that Patrice Motsepe, who is basically the richest or the wealthiest black individual in South Africa, he started the company and it's been a success story. So that's I guess a good thing. But on the flip side, the fees, the management fees, just insane, and they've got a lot of criticism for that over the last couple of years. So just for that reason alone, and also it's a holding company. Personally, I'm not a fan of holding companies. That's just me. You can buy into whatever you want. So not really a company that I follow.
Yeah, what I saw with the management fees is that there wasn't actually any performance bonuses this year. The fees fell from above 100 million to close to 20 million. I don't have the exact stats with me, but you can just double check that. But the fees fell a lot, and that's because of the restructuring of the fees, and also they didn't hit the targets that they set out, the management targets for the returns in net asset value and the business generally. So at least now there's skin in the game to perform. Definitely a company I'm going to watch because it's an experienced management team sitting on interesting assets. But for now, I'm on the sidelines. Just two companies, last two JSE companies, and then we're going to get into some interesting US happenings. The first one, Investec, basic earnings per share is expected to increase by 60 and 67%, which is a proper increase. But we've seen with all financial companies in South Africa, really good results. Earnings above 30%, and that's just a mix between interest rates increases, more customer adoption, more transactions. But the one consideration going forward is how much will become bad debts with the higher interest rates, because we haven't really felt that yet. We started feeling it, but it's not really impacted the economy yet. But it's something we're gonna have to watch. And then finally, ADvTECH, another education play. I've been interested in this company for so long, but I've just never really dealt with them or dived into them. But they are performing. That's ADvTECH, and their basic earnings per share is expected to increase between 18 and 23% in a tough environment, showing great growth. They're sitting on really, really valuable subsidiaries and businesses, and it's quite interesting to watch. Maybe it's something we can cover on the FinMeUp app as a stock pick. There were quite a few interesting posts this week on the FinMeUp app, so you can check that out. And also let us know in the comments, where is your quiz streak at? I'm at the highest ever, and that is 28 days. I see there's still 4 people with streaks above 100 days. Let us know where your streak is. Also, if you're finding this valuable, consider liking and subscribing. and you can book a call with Paul. Paul Cole. You can book a call with Paul and ask him your financial questions, and he'll give you his input. Now, let's get to the US. The next one I'm giving to you, you understand the subject much better than I do, and that is SVB, Silicon Valley Bank. Please summarize for us what happened with Silicon Valley Bank.
Here you go. Let me just. All right, I'm ready. I'm ready for you. The US is in chaos at the moment. There's the 3 banks that already failed, and this is actually the biggest of the 3. This is the second largest bank collapse in US history. Total chaos at the moment. So let me just clarify exactly what happened here. So it's a bank specifically focused on tech startups and cryptocurrency. So especially in the tech startup space, and of course startups like FinMeUp, we acquire capital via venture capitalists. So it's companies or individuals with money. They invest in the company. You put that money or your capital into a bank. In this case, it would be Silicon Valley Bank. And then for the next year or two, whilst that funding lasts, you pay your operations. So you pay your salaries, you pay your development, you pay your marketing, everything that you basically need to. And then when the runway is, so to say, up, then you acquire new funding. That's how it basically works. So all of these companies now have a lot of money in Silicon Valley Bank called deposits. Cool. Next step. How does the banks actually make money? They take your money and they, of course, lend it out to other people. And the difference in interest rates is how they make money. In the US, the reserve requirement is 10%. Reserve requirement is how much of the money that you're acquiring as a deposit may be lent out to other people. So if you get $10, you may lend out $9, and you have to keep $1. So what I'm trying to say is, if you are the only customer of the bank, you go to there and you put your 10 rands into the bank, tomorrow you come back, you want your 10 rand, it's not there. There's only 1 rand because 9 rands has already left the bank, lent out to someone else. That's fractional reserve banking. That's a story for another day. But anyway, so they receive all those deposits, they lend out the money, quite a few more deposits than loans. So what they did was they had to do something with the money, and they actually bought a lot of bonds. Now, for those of you guys, listeners and viewers that don't know what the bond is, the gist of it is a glorified loan. You have a lump sum, you pay it to someone, and they pay you interest on that. Every 6 months, it's called a coupon. That's how a bond works. Right, what happens next? Welcome to the 2021, end of 2021, 2022, and thus far 2023 global recession. We have inflation, we have interest rates, we have costs that's higher, companies are struggling, the demand for their products are going down because we're in a recession. So all of a sudden we're struggling and we need money a lot faster than we anticipated. So now these guys go to the bank and say, listen, sorry, I didn't expect this, but I need my money. And this is where the problem now sets in. So they have your money a little bit on the side, but remember, most of your money is lent out, and the money that's not lent out is locked up in bonds. So they don't really have your money. So that's how a bank run essentially starts. So one guy comes in, it's like, can I please have my money? Okay, cool, here's your money. 10 guys, 20, 50, 100 guys comes in, and all of a sudden the bank says to this guy, I have your money, but I'm going to have to sell some bonds or something. You're just going to have to wait a week or two. And then that's like, what? You don't have my money. I need my money. And then this guy calls his friend. All of a sudden, everyone is at the bank. Listen, I need my money. Where's my 50 million? Where's my 250 million? Where's my $800 million? And they're like, we don't have it. We don't have it. We are going to have to sell bonds at a very rapid pace or whatever. And that is, guys, and that we call a run in the bank or a bank run. It's happened several times in US history. It's normally, or any issue, or in various countries, is normally because of a recession. So something causes something that causes people to want their money, and they want it now, and they don't have it. It's not there. So that is a total chaos. And then just finally, as a final comment, now the US has 2 options. Either we let this go, and all of these tech startups, all of these crypto companies, basically we lose that, and the economy goes bust for the short term, or we bail them out. And this is what option do you have? We're already in a recession. If this now happens as well, it's going to be a global depression potentially. So the central bank stepped in, and also HSBC, which is another massive bank. They actually bought Silicon Valley Bank for how much? Guess how much they bought them for? $1. Because what are you actually buying? You're not buying anything. You're buying debt because Silicon Valley Bank owns owes all of these people all of this money. So that's essentially what you're buying. So you're buying that, and then you're going to manage that, and hopefully you'll salvage something from that.
Yeah, that's a very interesting, very good explanation. Yeah, think someone bought it for €1 is crazy, but you take on a mammoth. But there's also what two things was interesting for me. The first one is how Bitcoin went up. With throughout this collapse, Bitcoin went up. It's almost like people are realizing maybe decentralized money, as a diversification play is not the worst idea for when the crap hits the fan. In this case, where you can't withdraw money, then you've got decentralized money. No bank is going to tell you can't sell your Bitcoin. And there's if you look at the Y Combinator, most of their startups there are actually at SVB. So it would have been chaos if the government didn't come to the rescue. And then the second interesting thing, which is a bullish, positive sign, but we're going to see how this plays out, is it's almost looking like quantitative tightening is stopping and quantitative easing is happening again. So we know it as quantitative easing. They are lowering interest rates, which means there's more liquidity in the system, which means with more liquidity, asset prices tends to go up. That's one of the quiz questions today. So you need to play that quiz to learn on the FinMeUp app. But there's something like $300 billion now back in the balance sheet, or increase on the balance sheet of the Fed. It's still very early, so just first gonna look at everything, but just from a first hunch, just a first view, it almost looks like things are going to change now because the Fed realized, look, if we raise interest rates higher, more banks could potentially fail. SVB is not the only bank that is currently suffering. There's also talks about Credit Suisse. I don't know how to pronounce Suisse or whatever. But there's more banks that could suffer if we raise interest rates too high. There is inflation. It is coming down. It is still very high, but it is coming down. So I wouldn't be surprised. Worst case scenario, maybe one more 0.25% increase at 25 basis points. Maybe even not. We're going to get more clarity over the next few weeks. But I'm starting to nibble again in the US, especially some of the tech names. Let us know if you want us to cover some of those US tech names, and we'll dive into that. And then two more quick earnings or metrics. So Roblox, which is an interesting company, very interesting metrics shown. Average daily active users of 67.3 million, up 22%. That is a lot of people for daily active users. And then hours engaged of 4.6 billion hours, up 24%. And estimated revenue up between 20 and 22%. Really good metrics from Roblox, especially in this economic environment. I know they have some exposure to SVB as well, but I think they'll be okay. And then finally, Adobe, earnings per share of $3.80. That beat expectations. Revenue also beat expectations. Adobe also tech play. This AI revolution and which companies will go on top and will go under is going to be very interesting to watch, and we'll cover that as that unfolds. Remember, this weekly wrap we do every single week, and we cover the most important stock market highlights. Let us know Transaction Capital up or down by the end of this week. Let us know where is your quest streak at, and let us know which US companies do you want us to start covering again, since we are seeing some positive signs. Still early days, but yeah. Anyway, thanks for watching. If you found value in this video, consider liking and subscribing. See you next week. Check the Keith McLaughlin's Stock Pick JSE video. The link is in the description. To book a call with Paul, link in the description as well. Hope you have a great day. Cheers.